Hello, Ash. Hey, Kevin, how are you? Hi, Zig. Let's have a great week, everybody. How's everyone doing? Last week of summer. Let's look for some opportunities this week. Everyone ready to roll? Did your work over the weekend, or you have some technical areas in mind so that when it gets there, you're not analyzing, you're executing? So I'll give you a little background of a few things for you to consider this week. You know, we have the equinox at the end of the week. I was looking at the euro here, and to me it looks like we're either developing some type of triangle here, and I think this low may be significant. I'm not looking for this low to be taken out. So perhaps you get some type of ABC, maybe to 61.8, around 119 or so. Because breakout over this level, this resistance, is going to measure about 160 pips or so. It's going to take it to new highs over this 121 level. So I don't think the dollar is done going down. I'm looking for one more capitulation in the dollar, one more low in the Dixie, but we could rally for a day or so. Here's a Dixie. I think that this high might be it, and that we could still get a test of lows. I'm in the Steve Volge camp that we need 93, a close over 93 to prove it. So to me, it looks like there could still be another shot down. You know, it is a low risk trade if you want to buy the dollar with stops under last Friday's low. But there's another reason besides euro. I think the dollar has another wave to the downside. And here it is, it's cable. So cable failed from an important area, but I don't think this is a peak. There's an opportunity to buy it at 134 or so. I still think there's another push to the upside. Everyone with me on that? That's the daily. I mean, we had huge momentum up here, you know, where no one could reach. This surprised a lot of people. Maybe, well, this surprised me, and then the follow-through didn't surprise me, but there's no momentum divergence up here. Give me Y if you see it. So we could get a pullback here. Knowing that you have a confirmed high, I'd be looking to buy a pullback. So you could probably do your fibs, look at your moving averages. Capiche? I'd be surprised to see it close back under 34. So that'd be a good area between 4.5 and 4 in my view, in my humble opinion. Now Greg has got a pip on the short side of Aussie, and I could see it. This kind of looks like a flag here. But I just want to show you the daily that gives me pause and my overall view that the dollar might have one more wave down. Can everyone see why I think it looks incomplete? So maybe we do pull back. I think as long as we hold this moving average, if the dollar has a new low, perhaps Aussie could generate a third drive up here. Okay, Via agrees with me. So to me, it looks incomplete, but you know, just like it was only a 2 in the euro up here and it worked, you know, you don't always get 3 drives. This was a 2, right? And it was a pretty nice trade, and Blake was on top of it up here, and it was a 2. See, you only had 1 divergence. So not everything's a 3. And like I told Blake, I said, you know, Blake, sometimes I wait for one more jiggle that never happens. But right now, to me, it looks like we still could get one more breakout over this in euro. I'd be alert for an S&P scalp sometime this week. I'm not saying it's a high, but on the, I think we're on the daily here. 4 hour, we're still diverging up here. I'm looking for one good pullback and then one more high, maybe to 25.25. But I think there's going to be a pullback there. So with that happening, the yen crosses, there might be something in the yen crosses. I just want to show you the yen. The yen's in an area where it could have some problems too. And also on the euro, Nick says as long as we stay above 118.50, she actually has higher levels, 23, I believe. So here's the yen. We are getting some nice non-confirmations in USD yen. I think there's a scalp coming here. This is your daily. It's your 4 hour. So here's your 1 hour. It's really grinding up here. So we've been diverging for quite a while, but we're definitely diverging from this high, this spike high that we had late last week. And God, the rally came out of nowhere. Now that I look back, could this be a breakaway gap just like it was in the euro? So interesting. I just noticed this today, and you know, I teach, and I was talking about breakaway gaps, and that they're rare and they usually happen at turns. So this may have been a major turn in US dollar yen, just like the euro bottomed on the French elections with a breakaway gap on a Monday. I believe that was Monday as well in the yen. It just closed lousy Friday and then rallied. Well, here you go. So here's another example of a potential breakaway gap. Here it is in the euro. This was Macron's victory. And we gapped up here. And Steve did a nice dissertation of people, guys that kept trying to sell it to fill the gap. And I said the gap was now between the trader and its banker. So those are a few of the things. I hope I gave you some ideas, some things to think about. Oh, okay, Ziggy. All right. So Blake, how are you? Hope you had a good weekend.
I did. I had a great weekend. Good morning, Dale.
How are you, bro?
Good. You know, just trying to, you know, we have it's a big day today. We have a big promotion going with ForexAnalytix, and so there are a bunch of new faces in our now open chat room. So it's
cool.
it's really great. And so we'll talk about that here in a second. But you know,
I browsed on the site, buddy, and the promo doesn't show up. It's still the same trial on the site, right?
Yeah.
Okay.
Steve's probably they launched the actually here. Let me show you. Nope, the promo's on there right now.
Oh, okay, cool.
Yeah, so I'll show you guys. So this is if you guys are, you know, you can talk about it again too. I'm just going to talk about it real quick. We have a start of the season. You know, it's a new season for trading because, you know, everybody's back from, you know, summer vacation, and then, you know, it's a brand new season. So we have our special that we're going to run for the next 2 weeks until October 2nd. So it's buy 1 month, get 1 month free, buy 6 months and get 2 free, and then buy 12 months or, you know, get in and yeah, basically half price. So actually, hold on really quick.
Plus now you're getting the trading room.
And then on top of that, you get the trading room. Yeah. So and let me just show you guys what the chat room is, and that's if you get a semi-annual or annual subscription, and we have a bunch of new traders, or if you've already been a user of ForexAnalytix for the last 6 months, you're automatically included. So you can see everybody's chatting around, and we're at.
Come on in.
Come on in. The water's fine. Yeah, there we go, Ziggy. So anyway, it's all set up now. Pretty cool. And so I know you guys are going to be talking about it, and so I'm going to actually talk about the markets a little bit, and we can continue to talk about the promotion, you know, throughout the webinar, but I want to talk a little bit about the markets here. So hold on really quick.
Your scalp areas were good Friday, Blake.
Well, okay, so let's you know, I know I covered a lot of the dollar on the video, on the week ahead video, and I want to talk a little bit about the dollar, because the dollar's in, you know, it's still in a pretty solid downtrend. We're getting a little bit of a lift, but you have to think that this week is a really big week for the dollar with the FOMC. So if the dollar is going to get any type of, you know, if it's going to break higher, it's going to break higher because of something that happened on Wednesday. I'm really hoping it does, because I think if the dollar does bounce from here, we'll get a pretty severe, you know, rally. But, and I'm hoping that happens, because really it's the only way I want to play the dollar is, you know, it's because of Wednesday, that the Fed actually is kind of hawkish, or gives us more of a indication that they could actually, you know, or confirming that they're going to raise rates again by the end of the year, but maybe even more. And so if that happens, then I do want to be long the dollar, and I don't know if I want to position myself long the dollar ahead of the FOMC. But you know, you'd mentioned that Greg is starting to short the Aussie dollar. If you look at the Aussie, we're right up against you know, some really key support here, which, you know, trend line support comes just below where we're at right now, and I think it's possible that we break down, and if we break down ahead of Wednesday, that'll be good, because I'd like to be positioned long the dollar, and I do have a little bit of dollar longs, but that's on the dollar Mexican peso, which is more of a, it doesn't necessarily move with the rest of the dollar complex. So but you can see, you know, we've got the euro dollar where we've got a you know, major support here. We got trend line support that comes in around 118. You got the pound dollar that's coming off, and we do have Carney talking today, by the way, which is important to note that Carney is speaking. He might try to talk down the cable, but I'm really hoping that the pound gets hit over the course of the next, you know, 24 hours or so we can have an opportunity to be long. But I think everybody's expecting Carney to be, you know, to talk it down, and how about if he doesn't? And if he doesn't, then, you know, the pound could really just take off.
So versus the dollar, Blake, it seems to me that the pound's the only one you don't want to short against the dollar. Am I reading you correctly? That when it comes to the dollar, you're pretty friendly the dollar, looking for the Fed to move in almost every instrument except cable. You'd use that as a buying opportunity.
Right. Yes, right. Exactly. And I'm not sure if I really want to buy the dollar yen either. The dollar yen, it's been very range bound. You know, we tried to break lower, and then we post a false breakout, then and it's been extremely strong. But it really depends more on risk appetite. You know what I mean? Yeah. So that is you know, that's going to be really a you know, a big deal with the dollar, to see how the dollar yen responds more to risk appetite and risk aversion. So I'm not sure if I want to play the dollar yen on the long side just yet. It's not. Are
you tempted to short it for just a scalp?
Would I?
The next day or so? Yeah, yen.
Yeah, I mean, man, you know, maybe if we get up to the 618, maybe if we're up around 112, I might. But you know, I tried to short it twice last week, and I lost money both times. I mean, I didn't lose a lot of money, but I did lose money both times. It's like, I tried shorting this, you know, this rally. It's very difficult to do. But then again, you know, also you have to keep in mind that the S&P is at all-time highs as well. So that is that's also a you know, a risk of being short the dollar yen, as you got, you know, equity markets that looked still substantially stronger. So and they're very strong. You know, I was thinking something really quick. We're going into that. I was going to look at the S&P, and speaking of which, I wanted to go back and take a look at where we're at right now, and I wanted to go look at the time that I thought the market was extremely overbought, which was back pre-financial crisis, right, in like 2008. Okay, and I went back. This is a monthly chart, and I went back and I looked at this peak. Okay, let me get rid of this, and I noticed that we actually peaked just before the financial crisis. We peaked in October. I thought that was really interesting because usually we have like this kind of summer swoon, you know. And when we hit highs here, if you look at back,
yeah, I remember it.
Financial crisis, we actually rallied into October, and so I was thinking, I'm like, man, this stock market is so strong. I'm surprised we haven't seen a sell-off, you know, at least a pullback. And I'm not expecting a repeat of the crisis, but what I am expecting the stock market to peak soon. You know, at least going into the fall. And I went back and looked at, you know, back before the financial crisis, and it didn't even happen until October. So if you go to the weekly chart, and I thought that was really interesting. I'm like, man, why is this market continuously grinding higher? And this is typically a very bad time of the year where the markets tend to pull back a little bit. And you can see we peaked there right at the first basically the first week of October, and then start to roll over. So I you know, if you look at, we're 2 weeks into September, we could still continue higher here over the course of the next week or two. It shouldn't be surprising.
That was a great point. October. And you know, they said actually seasonally is the worst performing month, even though we've had crashes in October. Sometimes we've had recoveries after that. And SEP was supposed to be a negative month, and we're up pretty good on the month right now.
Got it. Hey, I just wanted to clarify something with our here. Let's go over here to the home page. So our new seasonal offer that's good for the next 2 weeks. It's buy 1 month, get 1 month free, buy 6 months for the price of 4. So basically you're getting, you know, on a semi-annual package, you get 4 months, or you're paying for 4 months. And then our annual package, you're paying for 8. You get 4 months for free. And it had a typo on there, and it just got fixed. So it's yeah, buy an annual subscription, and you get basically 4 months free. So that is and it's an extremely generous offer. That will only be available for the next 2 weeks, and that's really, it's more of a gateway so people can be allowed to, you know, get in the chat room, because I know a lot of people really want to use that. So anyway, just wanted to go over that really quick. So hey, let's just talk about what's happening this week that are the important components of this week. So we have, first of all, on Wednesday, we have the FOMC. So that's going to be like probably the most, you know, critical piece of data that'll be on Wednesday. And then you know, today we have Mark Carney who's speaking, and like I said, he's going to influence the cable. I would be personally, I'd be surprised if he didn't talk down the pound, didn't try to talk down the cable, because I'm sure they're probably looking at the pound and worried a little bit about the recent rally that we saw this last week. He might try to talk it down a little bit. We have GDP out of New Zealand also on Wednesday afternoon. We have the BOJ that's meeting on Wednesday evening or Thursday morning for them, which, you know, BOJ meetings are usually not super important, but this one could be because the yen has been in a pretty tight trading range as of the last couple of last couple of months. We have Draghi speaking a little bit later this week on Friday. He's also, and we also have PMIs coming out of the Eurozone on Friday morning, and then we have CPI and retail sales out of Canada, which, you know, I'm really hoping this week, Dale, I'm really hoping that the dollar Canadian makes it back up to 123, 123 and a half. I really want to be a seller of the U.S. dollar Canadian at a little bit of a higher price, but we're trying to grind up there. But as you can probably see here in the 4-hour chart, this is a really good way to display it. We have worked off all of the oversold conditions. The daily chart, I mean, we've worked off oversold conditions in the daily chart. So now, I mean, this dollar Canadian is, in my opinion, it's prepared. It's prepped to, yeah, it's flagging now, and it's prepped to make another leg lower. It doesn't necessarily mean it's going to happen today or tomorrow, and I'm hoping we make one more stab towards 123, 123.50, you know, like this over the course of the next couple of days, and then I actually want to be a seller of the dollar Canadian. So I'm hoping we make, you know, one more leg higher here in the dollar Canadian before rolling over, and because I want to sell it. I'm interested in being a seller here, but I'm also hoping that we can rally a little. So, and that's kind of what I'm waiting for with the U.S. dollar Canadian, and you know, looking at like the euro pound, I'm really hoping Carney tries to talk down the pound a little bit, and the euro pound can bounce, because I want to be a seller of the euro pound on any type of rally now. And, you know, I'm hoping maybe it rallies another, I don't know, 60 to 100 pips from here. So, but we'll see. You know, we'll see, because later, it's later on this morning. It's going to be in about 2.5 hours when Carney starts speaking. So that'll be what I'm, in particular, what I'm looking for. So other than that, what else are you looking at this morning, Dale?
Well, you know, I kind of lean towards a scalp on the short side and again in the next couple of days. And actually, the euro, to me, looks like it's not done yet unless we take out last week's low. You know, I know it's weaker than the pound, but I think that there could be one more push in the euro above that. As long as 1850 on a closing basis holds, that we could see 21.5, 22, something like that. And also, I agree with you on the CAD. I think we're going to go to Nick's and Grega's long-term targets of 116. And actually, what you showed would take it pretty close to there if that flagpole manifests after a breakdown.
Yeah, I mean, if it really does, then we could push down into the teens for sure. You know, one thing I guess I actually should talk about is I actually exited my Aussie New Zealand, and I did personally too. The Aussie New Zealand, the risk is that we have the New Zealand
the elections.
Yeah, this weekend on the, you know, at the end of this week. And
too close to call, they're saying right now.
Yeah, and I actually want to be a buyer of the Aussie New Zealand again. I'm just worried that we might pull back a little bit further towards 1850. And I mean, because you have to think about that. This has been a substantial move from 103.50 to 111.50 just in a few, you know, just in a few weeks. Well, actually, in a couple of months. So any pullback to 108.50, I'm a buyer if we can make it down there. We might not even make it down there though. This could be it. But I have orders to buy the Aussie New Zealand on dips. I just, ahead of the election risk, it's, you know, obviously there's a lot of risks, so you got to be careful, and sometimes, you know, being safe rather than sorry is the better approach, especially when there could be a lot more volatility in store for the Aussie New Zealand this week. So I personally had to pull mine off the table just because it started to crack last night, and in the Asian trade it started to break down a little bit, and I'm like, you know what, it's just time. It's time time to pull it off the table, and I can always re-enter. That's the thing about markets, is you can always re-enter, you know, and that's why I'm never shy about taking losses. If I got to take a loss, and you know, and I feel it's not right, I'll take a loss, and then I'll look to re-enter at a different place if I can. So yeah, good morning, Steve.
Good morning, my friend. Do you still think, personally I do, I just wanted, you know, your feedback as well, that any opportunity, let's say that Carney pushes the pound lower towards 134, do you see it as a good buy there?
Yeah, actually I do. Totally. Totally, and you can see I have it drawn out here. Any move down to 134, it's going to be. But you know, here's the thing: everybody's expecting it, Steve. Everybody's expecting or hoping that Mark Carney is going to talk down the pound.
And perhaps he doesn't, of course.
Yeah, and if he doesn't, the risk is the pound. Now, one thing I have to point out with the cable is you can see this is following Brexit right here. This is a weekly chart. This is the peak from 2014. Okay, this is the high that was following Brexit, the night of Brexit, and this is the peak that we hit on Friday. How about if we break through 136 today, or you know, this week? I mean, the pound could really start to squeeze. I mean, we may look at it right now and think, oh man, the pound really squeezed higher, but it could really get kind of out of control. Like,
weren't a lot of cable bulls a long time ago saying, when we were bottoming, that there was potential for 144 or something before this rally ended? I know there was a 140 handle, wasn't there, Steve, by a lot of the cable bulls, and maybe Stelios is one of them that had numbers in the 140s.
Well, if you look at the previous support right here, and also 618, it comes in at 138. So, okay. I mean, that looks entirely doable, especially if we clear last week's highs. Man, it looks possible. I don't want to chase it up here, but I just know that the whole market's short. So if it goes, it's probably going to go. You know what I mean? And that there aren't very many situations where I chase the market, but in this case, you know, because positioning is so lopsided and so many people are short the cable, it's probably not a bad idea just to jump on the train at least a little bit. So anyway, that's what I'm thinking. Steve might have some different ideas here. I don't know.
About which pair, mate? Sorry, because
just about the pound, about the possible squeeze here. If it squeezes past 136.
Personally, first of all, we had a friend that indicated something, you know, very interesting. I hadn't paid attention to it, I have to be honest, that at 136.60 almost, there is a gap. If you go a little bit back on the chart, I mean, you can see it there. Yes.
It looks like a tail. It looks like a tail, but you're calling it a gap.
It is a gap. It is a gap because the next day we opened lower and we never closed it. There it is. Yes.
Okay. Between the previous day's low and next day's high, there's a what? A pip gap? What is it?
No. There is.
I see.
Here, and then yeah.
I see. Okay. It looked like it. All right.
And I think that one way or another, where we've gotten ourselves, Blake, I think this gap is going to be filled. I don't know what you think, but I think it's going to be filled. And
yeah.
I'm totally in agreement with your blue line there. I also think that we might see 138.50 get filled. Now the question is it going to happen from here or is it going to happen from lower? Obviously, if it happens immediately from here, we like Carney's hawkish and we just penetrate the descending trend line and we accelerate higher. I think that we might not even get a buying opportunity. I think that the move higher is clearly impulsive. I mean, it's more than obvious that the move has been accelerating during the past few days, and I think that we should at least see one more high. So I think that the market is still unconvinced about this pound move, and that's also going to help perhaps this move unfold, because I still see a lot of people that are skeptical about the pound's move. You know what I mean?
Oh yeah. Oh no, that's exactly what I was saying. It's like, okay, well, you know, a lot of people are not, and it's very poor positioning too. You know what I mean?
Yeah. Yeah.
So it's very.
And I'm pretty sure that there are also a lot of shorts that have not been taken out in the market yet.
They're penny wise and pound foolish, those shorts.
Yeah, from longer term positions and from institutional traders, etc., etc., etc. People that use like very large stop losses, or people that might have been a lot in the money for a long period of time. So, you know, they might be showing patience for the time being. So I really think that there is still a lot of fuel to be thrown in the fire of a possible bullish move of the cable. And, you know, under specific circumstances, this thing might have a lot more to move higher.
Yeah, no, I 100% agree, and that's why I was just mentioning, and maybe you didn't hear this, is that if we break Friday's highs, I might chase it a little bit, and I don't like to chase the market, but knowing how the market is positioned right now.
Yeah, I didn't hear that, but I agree with you 100%.
Right.
Yes.
Right. Exactly. So I mean that's so I might chase the pound higher, which again I'm not prone to doing. I don't like to do it, but in this is a special situation in my opinion. So anyway,
can you guys believe there's another hurricane barreling into the Caribbean again? It's unbelievable.
Is what, Dale? Sorry?
Another hurricane barreling into
Really?
the Caribbean. Yeah,
Again?
Maria.
Okay. Yeah.
I mean, it's
another one.
Another one, and it's could be a category 3 or 4. My friend in Puerto Rico is leaving. They're expecting 40 inches of rain.
Unfortunately, these are some of the side effects of climate change. And, you know,
maybe it's NOAA playing with the weather. You know, a lot of governments have been experimenting with, you know, fooling around with the weather.
And unfortunately, you know, some people don't understand. Even hurricanes are affected, and I mean their frequency is increasing due to that. I mean it's a whole process, you know. But you know, A leads to B, B leads to C. I mean it's a big conversation. By the way, to come back to the pound, Blake, I also think, I don't know what level you have in mind, but I also think that any rebound of the euro pound towards 98.20 is also a good opportunity. I don't know if you have a different area in mind, but I like that that level, 89.20.
Oh yeah, which would be right. It would be highs on Friday. You know, I guess we could probably measure from this low, and so if you have to imagine this move is a strong move, which I would assume it is, right? So hold on, let me do this. So if you look at the 24% retracement comes in at 89, the 38% retracement comes in at 89.80, which anything below this 89.80 is going to be a short for me. So that means that if we rally, you know, I might stagger entries, you know, like here.
I thought you only did that on Saturday night.
What's that? I didn't get it, but I'm gonna laugh just because you're laughing about it. So.
All right. Well, there's many ways it could be interpreted, buddy.
Okay, but if
I also like, I know it's in between fibs, Blake, but I also like 89.20 because if you go a little bit more to the left on the chart here, as you are in the 4-hour chart, you'll see that it was a support and resistance zone, you know, quite recently. You see that we held that, yeah. Yes, there. So there is a little area, you know, of support resistance that we've had on our way up at, you know, around 89.20. It was also the the 38.2 fib on the way down. So, you know, anything between 89 and I would agree with you, up to 90, I think, you know, can produce, you know, a great shorting opportunity as long as we see like a reversal candle once again. But I also think that the move down that evolved after 92, after we retested 92, is clearly impulsive. So I don't expect that this is going to reverse from here and just head to new highs or whatever else. That would surprise me immensely.
Right. So exactly. So I will use any type of bounce to be selling into, but I think above 89, I would start being interested, you know, in starting to position myself on the short side. And that's why I hope today that Mark Carney tries to talk down the pound a little bit. I really do. I had one question before I'm going to go from Sheldon. He says, you may have touched on position sizing for currency trading in the past, but I'm curious what methodology Blake uses for sizing his currency trades. Does he employ a different methodology for currency trades versus equity index future trades? No, it's everything for me is all about risk, Sheldon. So it's all the same. If you go, okay, well, what is your, again, then your numbers are going to differ way different than mine. This is why I'm just going to speak in round numbers here. Like, let's say you $1 million account. Okay, if you got $1 million account, you got to figure, okay, well, what is a percentage risk of $1 million? Well, you know, that might be 10 grand. Or if you have $100,000, it might be $1,000. Or if you got $10,000, it might be a 100. You know, but whatever your account value is, you got to think about
1%, Blake?
1% or 0.5%, or, you know, it depends on how many positions you take too. I mean, you know, if I'm in like 5 different positions, I don't want to take a, you know, risk a percent on each position, because if I'm risking a percent on each position and then I'm wrong on all 5 at once, then I'm down 5%, and then now I've got a bigger problem. So, you know, it really depends on the person, but I think a good rule of thumb is you don't want to risk more than 0.5% or 1% in any one particular trade. So, you know, I don't think that I think that's pretty universal. It's a good universal language, or at least a good starting point when you're thinking about risk. But where people get into trouble is they, you know, especially in the currency market, is they don't understand that you know, how much leverage you have, and you know, you get in a position, let's say you have a $100,000 account, and you're like, well, I'm going to buy $200,000 worth of currency, and then you risk 100 pips, and then you lost 2 grand, and you're like, wow, I just, you know, lost 2% of my account in that one trade, and then now, you know, trying to make that back is going to be very, very difficult. So, you know, I think if you keep your risk around 0.5%. Or 1/4%, or, you know, 0.75% or whatever per trade, that's a good starting point, you know, and depending on how many positions you take at once. So anyway, but there's no set rule, but that's kind of like I think a good rule of thumb to at least get you in the right frame of mind. All right. But anyway, Steve, I'm going to let you take over, and hey, I just want to make sure I mentioned before I you know, sign it back over to Steve. Guys, this offer for ForexAnalytix, it's only available till the 2nd of October. So, all right, and so to get into the chat room, which was private for the longest time, and we've opened it up to everybody, you have to have a semi-annual or annual subscription, or have been a ForexAnalytix subscriber for the last 6 months. And the reason why we break
it down, Blake, on a 6-month deal, they're getting the service for what, like $40 a month if they go with their deal?
Depends on what.
Go to pricing, Blake. It also has a breakdown by month there. Yeah.
Yeah. So
I mean, if they took everything, if they took, you know, Blake and Greg and the whole team, what would it be per month on that?
Yeah, $59 per month on a semi-annual. Or an annual. Yeah, I mean, it's normally, you know, near $90 a month. So it's a great deal, and you can see all the pricing here on our pricing page. And once you guys enroll, make sure you download the app too. So don't forget to do that. I think a lot of people forget that they are like, oh my gosh, it's, you know, that's how a lot of people get the analysis is, you know, on their phone. You know, because when you're trading intraday, you know, you're in the chat rooms or whatever, and you're trading intraday, it may not be as important as to when you step away from your computer. So anyway, make sure that you guys get enrolled, and it is only good for 2 weeks. It's a great, I mean, it's I think the best pricing we've offered ever. And it's only going to be available for the next 2 weeks. So make sure you take advantage of it.
Think about that. Six pips a month, guys. I know we all think of everything in pips. I'm wondering if when you guys go out to buy, say, an automobile, you say, what do you mean? It's 35,000 pips for this car? Anyway, 6 pips a month. And I think that most people just in the room, and let alone the chat room, 6 pips a month, I think, can be accomplished, don't you guys? All right, Steve, go ahead. Right. Do you do that, Blake? When you bought your house, did you say, I have to pay 650,000 pips for this house?
No, but I'll tell you what I do is whenever I go to Costco, Costco's a three pip run for me. So
okay.
Yeah, it's a $300 trip every time. All right. All right, Steve, I pass it over to you. You guys have a great day, and thanks, guys.
Go get it, buddy. Hi, Steve.
Hey, Dale. How was the weekend? I hope everything was well.
A lot of football. Nice, very nice weekend. Weather's beautiful. No complaints. God bless them. You know, I noticed, I tweeted, Steve, you know, I've been in the business 42 years now. Kind of amazing, isn't it? Yeah.
That's amazing.
From when I was a runner.
I knew you were in decades, of course, but 42 years, whoa.
42 years from being a runner to, you know, being a floor trader, to having an IB, to being in chat rooms, to training people. 42 years. So my theme song is God Bless the Broken Road that led me right to face.
Yeah, it's a
Rascal Flatts song. You know, I've been preparing my whole life for what I'm doing now.
It's really good having you on board. I can tell you that much for sure.
42 years, 2/3 of my life in this.
We are fortunate to have you. You are multi-talented. Songs included.
I wasn't fishing. I'm just amazed. You know, I'm just amazed. Where did the time go, bro?
Oh yeah, time runs. Time flies. I can see that now that I have a young one. You know, in the speed he grows, it's amazing.
Yeah.
Okay, so I know that we have quite a lot of questions here. I think we. I think.
He said I did my first trade on a stone tablet.
Yeah, definitely not an iPad. I can tell you that much. They didn't have that back then. So I for sure think we covered with Blake both cable and the euro pound. In both cases, pullbacks in the case of cable to 134, in the case of euro pound to anything between 0.89, 0.90. I think they're going to, present some very good opportunities to be long the pound. Of course, we can have a look at the rest of the pound pairs, because I know that they are of interest at the moment. As we said on Friday, I'm expecting at least one more leg higher. Now the question is, will we push first, let's say, to the 161.8 before we see some kind of a little correction, and then higher again? Are we gonna push lower from where we currently are? So far, we're seeing like a tweezer top on the daily. That might be the case as well. In any case, as long as we remain above 148, obviously, there is only one place to be, and that's long. Because being short, except of course if you're a scalper and you want to catch the little corrective move that might unfold from here or a little bit higher, But if we're talking about other kind of positioning, that's like not extremely short term, you know, it's nuts being short above 148, not unless we see something major that we haven't seen. So pound yen is quite clean and at least in the medium term bullish as far as I can see. I mean, there's absolutely no doubt with that. The situation with pound Aussie is also quite clear. It hasn't exactly reached our target, our second target, which was 170.75, and this zone here. But any type of pullback, either it comes from reaching that zone, or even if it comes from a little bit lower, any type of pullback should find support just below 167, and that should, you know, produce at least one more move higher. Okay, so let me delete this because we've already done that, done this, done that. Let's have a look at the pound Kiwi as well. Pound Kiwi, the same situation. We said on Friday, at some point we're going to see a small pullback. It might come from here. It might not even come because we might just create some. We're already having an inside day. We might create like some type of a correction that might last like 2-3 days, and instead of being in distance, it might be in time, and then push higher. But you know, regardless, the key level to watch here is at around 189.50, because at 189.50 we have this major trend line, and any break above that, you want to be, you know, more certain, call it roughly 190. Any break above that is going to, in essence, confirm a prolonged bottoming formation. We started with this break here that we had indicated back then. You could also interpret that as an inverted head and shoulders. Then, you know, we had a pullback, but we held this ascending trend line. Then we stayed in a range for a big period of time. We had said that the break of the range is going to be major, and indeed it
what a beautiful ascending triangle if it plays out, bro.
Yep.
It's going to measure like over 2, like 205.
Honestly, Dale, I think that if we clear this,
yeah, the breakout,
the next zone of interest is probably at 203, and then I have the 210 zone. So yes, I'm in total agreement with you. We're headed a lot higher once we clear this one.
Yeah.
Of course, nothing moves in a straight line, so you know you shouldn't be buying at nut levels with tight stop losses, because you know even on a huge bullish trend you're going to get some pullbacks. So you know you'd rather buy on a pullback. And you know the pound CAD, we had warned about that when we were breaking the descending wedge. We warned again when we were testing this confluence of the horizontal zone and the descending channel. We also said that this was lagging the pound Aussie and the pound Kiwi, so it was an opportunity. We are seeing some consolidation today, which makes sense after 2 huge days higher. Any retest of 162.80, let's call it, I think it's going to produce another long opportunity. Okay, so I don't see any pound pairs currently that don't look good. Some of them look good, some of them look even better than good. You know, but all of them more or less at the point look at least constructive. Okay, and as we discussed before with Blake, I think that the market is definitely not right position for this move, and shifting positioning is something that can't happen instantly. So this is not a process that can happen within a couple of days of strength. Okay, and as long as we're seeing these kind of tectonic shifts in the pound, as long as everything stays aligned together, the pound can keep surprising to the upside. So let's hope that Carney might, you know, make an effort to push the pound down and give us some opportunities here to be buying the pound, because you know I'm not the kind of person that I would be liking buying on, you know, on strength, because you know where would I put my stop loss? I mean, here in the pound CAD, if I want to buy that market, I would have to put my stop loss like at least 300-400 pips lower. It's not something I would like to do.
So what's this move in cable on the Richter scale, since it's tectonic? Would you give it like a 5-1 or what?
Listen, I would give it at the moment like a 5, but
Okay.
if this proves to be the preliminary earthquake, we might signal that we might have an 8 or 9 coming. You know what I mean?
Yeah, I got it.
Yeah.
I like that. Very descriptive, tectonic. That sounds major to me. Living in California, that's pretty major. Tectonic stuff.
Indeed.
All
Okay.
right, I'll shut up.
Let's see about questions. First of all, I wanted to say that it's not unexpected at all. And on Friday, I said that I'm a little bit skeptical, and I would see a move lower. But on the other hand, you know, you could not disregard the fact that support lines were holding, both on silver and on gold, because now I'm talking about the metals. Both on silver and on gold, we are now seeing finally a penetration of the ascending channel supports. As you see, it's exactly the same picture. So this is silver and this is gold. Both of them today are actually penetrating the support zones. Having to do with gold, as we said on Friday as well, things are quite clear. If we broke below this, which looked likely, it's all about the 1300 level. And I think this is a level that's extremely major. So I really believe that 1300 level is going to create a reaction, even if that proves to be temporary. So I think that buying gold at 1300, if we get there, for at least a short-term bounce, is a high probability trade. I don't see very likely that the market will just slice through that level like, you know, it has no importance. I don't see that being very likely. Okay. Now, having to do with copper, because I was having a look at it, you know, as I do, especially every Monday, I'm trying, you know, to have a look at everything I cover, you know, to see if there's something I missed. Having to do with copper, copper is reacting perfectly to the first zone we had indicated. We also said on Friday, you know, that there are 2 zones I'm looking at. One of them is this that we had drawn back then, and the other one is this. So one of them is roughly 2.95. The other one is like 10 cents lower. As it seems, this first zone is creating some kind of a reaction. That does not mean that, you know, it's going to go to new highs from here, because of course it might throw at us a small bounce and then, you know, give us another leg lower. But so far, you know, this reaction is definitely something to note. So let's see how this thing evolves, because the zone it happened from is, you know, a zone I was expecting some kind of a reaction. Let's see. Let's give it a couple of days and see what kind of a reaction is this. If it proves to be weak, then we should push at least once more lower towards, you know, 285. So for example, if we get any reaction that fails at any point below here, 3035, I would expect then the second zone to be tested on another leg lower. So testing 286 roughly. Okay, so let's monitor what that brings during the next few days. I think we covered metals, and let's go through questions because we have quite a lot. Thing long CAD and pound against the JPY is the trades doing forward to year end. That's V. Okay, I agree with you, and let me remind to people, and thank you for reminding me, because we had shown that back then. The reason V is talking about the CAD yen as well, and we had shown that, I think maybe it was 2 weeks earlier. I don't know if you remember this, Dale. It's this.
Yeah. Mm-hmm.
It's this.
You know, I remember. You know.
Yeah, it's this huge inverted head and shoulders, which has now been triggered. Okay, so I'm in agreement with you. I mean, you cannot possibly be bearish this as long as that zone is holding. Okay, so any pullback to 89.5, 89.5 should be bought, no questions asked. Doesn't matter if it's going to work or not. Technically speaking, from a technical perspective, this is how you should treat this. And you know, this is a high probability trade. There is no 100% probability trade, and there will never be. But this is a high probability setup. Hey guys, yeah, thank you. We fixed the mistake. Bloomberg, Nitis is linking at something in warning against complacency. Let me see. Fed to join Bank of England in warning against complacency. Okay, let's have a look at this. I'm actually going to put the link in the chat for our friends to read on their own. I'm going to read it myself later on. I just put the link there so you can read it. Nitis is long-term member of our chat room as well. He's sending us this. Thank you, Nitis.
Mohammed El Arian.
If we upgrade to 6 monthly from monthly, is the special offer available? Yes, it is. You can upgrade from your existing plan and take advantage of the new offer, guys and girls. Pound on the verge of a breakdown, 5-minute chart. Yes, Brian, I agree. The pound is showing some effort of a reversal here, but I really think, as we covered before, I really think that any weakness towards 134 is a good buying opportunity until proven otherwise. USD has declined. Major intermediate support. The probability of a bounce for the USD pound. Yes, that might happen before we get some new buying of the pound. Blake showed that line as well. Thank you, Arif. I've been in my industry 36 years and I'm now a new and learning trader. I'm so glad I found you guys here. This is an excellent asset and some very talented traders, yourself included. Thank you very much, Alan. Arif, what is the maximum positions you have at any one stage? Listen, Arif, it has to do with what the market throws at me. I have found myself having 6-7 positions at the same time, and I have found myself having 0 or 1. So, you know, there are some few times, if you remember, before the summer, I was on a spree of getting positions, and I actually had like 2 very successful months because the market was throwing at me, at least for my eyes, some very clean setups. So I was happy to have multiple positions at the same time. But on the other hand, you know, I'm a person that can honestly go without a position at all for 1-2 weeks. It might happen if I'm not really happy with anything from what the market throws at me.
So I will tell you, Steve? I bet you don't have much on now. Am I right?
You're absolutely right. Only I currently have only the half of my remaining euro pound position, which I'm looking to add back the other half on a bounce, and make it again.
That tells me something. That tells me that's a big message to me. Does anyone know why that's a message to me? That tells me there's not that much to do, or Steve would be in it.
There is actually. I just didn't want to be buying other pound pairs at the very end of the week, but I should have. I'm trying to avoid FOMO, like fear of missing out, or in retrospect, looking back and saying, "Oh, you should have done that." But I honestly should have bought the pound card. I should, because I was seeing it. I knew it, but I already had I had a full exposure still on the euro pound, and I was happy the way it was moving. So I was already benefiting from the pound, but I should have gotten involved with that. I didn't. Anyhow, now it's gone. But I will be buying pound pairs on pullbacks. I will. So I'm looking to add more pound pairs to my portfolio at the moment. Okay, so let's see what a euro pound Brexit gap is down at 81. Yes, that's a good point, Luca. Of course, we're some way off that, but it can happen. Okay, Robert is asking about USD CNH. Okay, haven't seen this in quite a long time because I can't trade it, unfortunately. That's why. Okay, first of all, this is, I don't even remember in which window I had done analysis on this, because I have, but it doesn't matter because we can do some fast. I remember the technicals of the USD CNH. I remember that we had this very nice technical break up here, and this is clearly an impulsive move. Okay, there is absolutely no question. This is a wave 3, undeniably. So, you know, when you see such a move, even in Elliott wave, you can start oppositely. I mean, wave 3 moves can be recognized even by an amateur, and this is one of them. So what I'm trying to say here is that we're seeing a very nice rebound in the USD CNH, but I don't expect this to be a bottom, simply because this is a wave 3. So this has to be a wave 4. So I would be looking for an area to actually, for this to actually reverse. Okay, this is one potential area, and then we can draw fibs to find others. Okay, and we can also draw fibs from there. So as you see, you know, it's like 665, it's a 38.2. We have a 50% that coincides with this area, which is also a nice area of importance. You can see this here clearly. Just look at this. So I am looking for this rally to fail at some point, either here or there, and push lower once again. Now, having to do with the short term, I don't even need to go down to a 4-hour chart, which I'm going to do, to see that this is most likely than not an inverted head and shoulders. Oh, yes, it is. You see? So I think that for the time being, this, whoop, that's what happens when you have the magnet.
I just want to let you know that Adam Button is here.
Oh, we have Adam. Very nice. Okay. Sorry, I didn't even realize the time was. Okay, we were at the top of the hour. Okay, so that's what I see, my friend. So in the short term, I think that this remains bullish. Let me also extrapolate the target as well, and then we can pass it. And you know, the rest of the questions we can follow in the chat room for whoever of you is there. Okay, 664, which is very close to the 38.2. So this has an implied target of roughly there. Actually, that's my mistake. Let's see. Yeah, somewhere there. Okay, so I think in the short term this remains bullish for a move towards the 38.2 at least, and I would expect some kind of a reversal afterwards. So thank you everybody else. You know, I'll see you in the chat room, and tomorrow, of course, same time as always, we can cover the rest of the questions. Thank you, Dale.
Thank you, Steve.
Enjoy the interview. Bye-bye, my friend.
Thank you very much, everyone. Welcome Adam Button at FX_Button. You could also find him at Forex Live on Twitter and Forex Live. Hi, Adam. How are you, buddy? Certainly good to see you and hear from you. Just waiting to hear your voice.
Oh, hi, guys. You got me?
Hey, Adam. How are you?
Hey, good. Let me make sure.
I just wanted to show you something.
What's that? Hey.
Does this?
Hey, that suits you well. It suits you well.
Yeah, you recognize this? I should probably ask the community. Who do you think is playing electric guitar here? Anyone know? And I hope the guys at ForexAnalytix don't call me a traitor, but you know, I had this T-shirt before I had theirs, so it's Draghi. You got it. Okay, Chad's got one too. So I wore this for you, buddy.
Nice. It was funny. We're on the same shirt.
Forex Live shirt. So you know what I want to know, Adam? You know where I want to start? I want to start with this lead guitarist, Mario Draghi.
Yeah.
And
right.
What kind of riffs? You know, lead guitarists, they play riffs. You know, they're bending the strings. Draghi's trying to, you know, walk a tightrope between not wanting a higher euro and yet knowing that he's probably going to have to start doing some restrictive things and tapering, etc. So tell me how Draghi gets the euro to the lead of Stairway to Heaven.
Great. Well, I'll play along. I would say it's more like Draghi's more like an Axl Rose from Guns N' Roses, in that the stadium is packed. Everybody is waiting for him to start to taper, and he never shows up. He shows up. He's going to be an hour later. He's going to be 2 hours later, and finally the show will start. And,
I think Billy Idol used to do that a lot too. You know, Billy Idol never showed up. So, all right, that was good comeback, Adam. So, where's Where's your head at on this euro that we've had a little pullback here? Are you in the camp that we should be looking to buy this pullback, and 121 is not the high in the euro, and we can still have another wave to the upside in euro, downside to the dollar?
Well, that's just it. I mean, the crowd is getting bigger and bigger and waiting for the show to start. And I think every time there's another delay that's announced, you know, there's some disappointment. There's that sort of gasp in the crowd or moan in the crowd, and the euro falls a little bit. But then they realize, well, the show is coming, you know, whether it's in a month or another month after that. But Draghi will have to get on the stage and play the tapering song. And I think you just say, you know what, I can wait. You know, I've got front row seats. I can stand here. I'm not going to quit. Yeah, my legs are going to be a little bit sore, and it might fall at 100 or 200 pips. But if I wait this out, it's going to be a great show, and it's going to go much higher. You know, the thing that I start to worry about is that when they finally do play, you know, people might sort of go home early before the taper really starts, or before the encore, or before they play, you know, November Rain or something like that at the end.
Yeah.
And maybe it is November when it starts to turn around, if we get the real signal in October, and we get this one final blow up to 125, and it's the show's sort of over before you expect, because I think everyone's just waiting, and they're saying, listen, you can fight, you can't fight me, Draghi, you're tapering, you have no other choice. So I'll be here waiting in a euro long, and let's go.
Well, you know, at every big concert, there's a backup band, right, bro? I'm going to keep going with this analogy. So we have the U.S. Federal Reserve as backup band, you know, leading off the show this Wednesday. You know, they coordinate and they talk to each other. Do you believe that?
Oh, yeah, absolutely. I mean, there was that synchronicity a couple years ago in tightening, and I think they tried to do it again this year. That might have been a little less coordinated, but I mean, everybody wants the Fed to hike, and the Fed feels that pressure. I think the Fed wants to hike, but again, maybe they're not quite sure what kind of band they are, or Draghi's about to add, or pardon me, Trump's about to add a few new members to the band too.
You know what? I think all these central banks aren't even playing; they're lip singing, and by jawboning, right? Lip sing, jawbone, and you know, maybe Janet does a little lip singing this week, and does Draghi a favor and drives it down, because Draghi's probably taking a little heat with the euro appreciating 10% here, and Janet could help him out a little bit by not sounding as dovish as she has over the past few months. What do you think?
I think she'd be very popular. She'd be popular if she did that, and I think she feels that too. My sense is that Janet Yellen is probably on the way out, and that to me, the answer to that question will tell you what she's going to do. I think if she finds or learns that she's not going to be the Federal Reserve chairman come February, that she will be more inclined to hike. I mean, when you get to the end, like Janet Yellen probably is, then you want to preserve your legacy. And I think the best way to do that is to hike, because you're diminishing the financial risks. You take away that criticism that you haven't hiked. Now, she's not alone, but I think she has enough sway that if she wants to go in December, she can. Otherwise, you know, Mester, I think she made a very good point. Like, if we're not hiking till March, well, that's not really gradual hiking. If we've gone from, you know, June or July, the last time they hiked, all the way until March, that's not gradual hiking.
That's fits and starts. Yeah.
Yeah, you have to go in December. You've seen other central banks, including the Bank of Canada, saying now they're hiking before the inflation numbers are high. So the Fed just really has to say it's confident. You know, employment has been pretty good. August was a little bit of a hiccup, but there's enough reason to hike if they want, or enough ammunition.
So are you more partial to selling rallies in the euro here, or maybe looking to buy a break and looking for maybe another move over 21? We're at 19.5 here.
Yeah, I think euro and some other spots I really think that Draghi trade has been a good one, but we're probably in the 6th or 7th inning of that trade right now. There's not that much left in buying the dips in the euro. The U.S., I think the trade next week is taxes. You know, the big question is, will we get some sort of tax relief in the United States? And I believe 100% that it will happen. I mean, I have less faith in Congress than anyone, but I think they love a tax cut and they need to get something done. And, you know, it's not going to be some great tax reform, but it will be money in pockets. The Fed's going to like that. The dollar's going to like that. And so that makes it a little tough to be long euro dollar, maybe long euro elsewhere, euro yen, anything yen really right now looks pretty good.
Okay, thank you for that. And want to acknowledge you were a cable bull. Last few times we talked, finally started to manifest, surprised a lot of people. I still think that we've talked that the market's still short pounds here. Pound crosses are coming out. Where are you at on cable here? Pretty hard to reach for it up here at 36, but are you a buyer of breaks here?
No, we talked about the seasonals at the start of August, right? Even before the Bank of England, and they were positive, and it was a heck of a run in that, and Australian dollar we talked about as well. But I mean, okay, so what's Carney going to do? That's the big question. Now you have Carney, and for those maybe out there who don't know, he has promised rate hikes repeatedly for the last 3 or 4 years, and every time he backs down, his credibility is like this thin right now. So I feel like he knows he has to hike this time. If he does this again, he might as well resign. So
interesting.
To me, I mean, the market's got it at 75% by the end of the year, but 65% in November, and it has to happen. And I think you just have to be long cable through that. I think it's probably a mistake because the inflation is just about the currency and it will unwind and the economy's kind of weak and Brexit's coming. But I think even like today, a low to high, we're down 80, 85 pips, and that's probably enough. So anything in that 80, 100 pip range, 75 pips, low to high to low, pardon me, on any kind of pullback.
We've been talking about 134 if it happens, if he's successful in taking it down there, but that would be kind of a gift to buy. Do you have any technical upside targets like in the 140 range or higher?
Yeah, that's a good one right there, 140. And even that 140 to 160 range, I think we're end up right back in there. I'll pull up the chart here. I've got some up there, but and don't forget Carney's speaking here in just under 2 hours.
Right.
If he tries to walk it back, it's going to be embarrassing. I mean, I wouldn't buy cable until then. I don't expect to see much upside. He might skirt the topic already. He's probably said what he wanted to say about it. Well, let's keep things graphical here and get this sterling chart up. I mean, it's very tough to buy, right? What is that? You know, 400 pips in the past couple of days. It sucks to chase, but I think, you know, you look at the Bank of Canada, and all you have to really do is, and we can pull it up after, is look at that chart of the Canadian dollar after they shifted hawkish, and everybody's talking, oh, you know, wait till it's back up at 135 and sell, and then you just miss it.
Right.
And it was the same with the euro. You know, everybody wanted to see it back down at 110 or whatever it is before buying, and it just never happens. And I think you'll have everybody buying sterling now. You have everybody covering shorts even more aggressively, and it's just up.
What a move in euro pound in the last few weeks. One of the biggest percentage movers I've seen in a long time. Really both ways, up there and then back down. Tremendous move.
Yeah, chart up there. I mean, you know, how much of this strength in Europe is a relief rally, and how much of it is economic strength? In Europe, there's a lot of enthusiasm now, and I think there's great investment flows. Stocks have been doing pretty well.
But you know what? I know I'm interrupting you, but you know, what's interesting is as bullish people are on Europe, we have all the indices in the U.S. making new highs. FTSE looks like it rolled over. We have lower highs in DAX. And so actually the European bourses are underperforming the U.S.
Yeah, I mean, they have been forever, I guess. And it's a good point because, you know, everybody talks about valuations, but, you know, who really cares? If you buy the S&P 500 and it goes up, it doesn't matter what the valuation is. So that's a great point.
Yeah, so, you know, that to me says maybe people are wrong-footed. They should have stayed in the U.S., but a lot of people, you know, there was a big movement in funds from out of U.S. into European type investments, emerging markets, Asia. But I want to get back to your neighborhood, and you're talking about the Canadian, what's happening here. So a long time ago, there were many technicians, some here at ForexAnalytix too, that were talking about a 116 USD CAD, which now is, you know, within a stone's throw. You know, it could be a month away. I don't know if we're getting, you know, it looks to me like we're still kind of flagging. And at 116, that it could be a major buying opportunity. And when you look at, you're looking at, what's that, a monthly there or a weekly?
Yeah,
monthly.
I call it the long term. It's got some
Yeah, so if we get down to 116, and that turns out to be an important buy point, 115, 116, which looks like, you know, some type of fib correction off the 2011 low to the 2016 high. What would turn Canada back the other way after one more shoe drops to take it sub 120? Could it be the real estate market starting to crack? Could it be the crude oil rally running out of juice? What's your best guess if we return from being in a, you know, short-term dailies, everything else, we've been in a bear market, but when you look at this, it's possibly just a correction in an ongoing bull market.
Yeah, I mean, the risks are there. Yeah, well, you named housing's a big one, which really is the consumer on top of that. Oil, I think we're probably 20 years away from the end of the fossil age. I mean, we fight about whether global warming is real, but we're 20 years away from almost very cheap power and electrical cars. And oil, I mean, these investments in oil are done once they run out. So, you know, but there are other minerals. There's plenty to sell from Canada, and that's a long-term story. You know, there's so many risks. There's NAFTA risks, there's political risks, and on and on. And I think probably what happens is the Bank of Canada realizes that the inflation isn't coming. So you have a few central bank ideas right now. There's this great shift in central banking about whether inflation will come if you have low employment. And in Canada, they call it the output gap. So there's an assumed top that the economy can run without creating inflation. And you have this gap here. And once this gap closes, now you get inflation when you get growth. And so the Bank of Canada has used this model for a generation. And now they think, you know, they're about here and they anticipate it's closing, and that's why they're hiking rates. But what's happening in the real world, and the Fed has started to realize this, and the ECB hints at it, is that you can get here, you can kind of go above it because you're not going to create inflation because you can't hike wages. You know, workers ask for a wage and they just move it offshore or they automate. This is a globalized world. Inflation isn't going to come from a tight labor market the way that it used to, at least. And the Bank of Canada hasn't come to that realization, and I think they will when inflation is stubbornly low in 2018 and 2019, and then they'll just get off the hawkish talk.
Yeah, so we're finding that in this new normal, that what you just explained, isn't that analogous to the U.S. Fed looking at the Phillips curve?
Yeah, it is, and that's why the next Federal Reserve Chairman is important, how they feel about these old dynamics, and whether it's an academic or whether it's somebody with a little more creative policy making.
Well, take a wild guess. Take a wild guess. Who do you think Trump's going to nominate?
My heart, I vote for Kevin Warsh. He has ripped into the Fed. I was writing something about him on the weekend. He doesn't think, he thinks the Fed's wrong about everything, and he used to be at the Fed. He's a Fed governor. He's certainly qualified. He's got some new thinking, and I think that would be very exciting for markets and possibly positive. My head, you struggle with it because you try to understand Trump. Maybe Yellen is renominated. You know, if I had to bet, it's probably the only bet there is. And anyone else is sort of a bore to me. There's not a real edge in that, but Warsh would be a lot of fun. And we'll see if he's really ready to back up the talk. But just to the dollar CAD chart, I mean, the market profile guys would kind of like this one. And you know, a lot of people talk about that because you spent a lot of time up at the top and up at the bottom there. And you know, you got to fill in some time in this area in the middle, and that includes down to 116 or even down to 113.
Yeah.
And I, you know, it's just gone a little bit too far too fast, but I kind of like, you know, I like that downside. There's the momentum there, but my guess is we get to 124, 125 first before it heads down, and I think it's probably the spot to sell. The Bank of Canada's on autopilot right now. They've shown they're not afraid to hike. So, you know, good for Paul Laws for leaning out there. I mean, the big trade is the dollar and a tax trade. I think the market is scarred by Congress. I think nobody wants to believe in Congress, and I don't want to either. But they're going to cut taxes, and the dollar is going to squeeze big time on that. I mean, you look at the CFTC positions, the dollar is net short in a lot of spots.
Yeah, DSI was 7, and also I guess the positioning, COT positioning in euro is very heavy long specs, almost records. So you did bring up the yen, and you know, yen's very important for what yields do. And I think the last time we talked, you were telling us China was buying bonds. I said, well, look for this rally to end soon because they're probably distributing. And we had pretty nasty action in the bonds in the last week or so. Yields on the 10-year couldn't get under 2. We're back to 220. One thing I did notice, I mean, this yen bottom came out of nowhere. It was kind of like a negative Friday close, and we actually left a gap. Kind of like the euro did from 108 to like a breakaway gap. And, you know, a lot of people always, you know, they want to short things. They think every gap can be filled. And, you know, if you sold the Paris election gap, you're broke. And maybe the same thing is setting up here in yen. Bear move in bonds, bull move in US dollar yen. You have some thoughts on that? We do have BOJ this week.
Yeah, I mean, the BOJs will be a dud. I mean,
they're always a dud.
It's always a dud. I mean,
maybe you need to make a T-shirt with a, you know, Abe or a Kuroda on the T-shirt playing the keyboards or something.
He's happy. You saw him in Jackson Hole. It was good at Jackson Hole. Pardon me. He's just hanging out there smiling. And this is a guy he's not worried about inflation. He's not, you know, as worried about growth or deflation. Nothing. He seemed to have no worries. He was just on vacation, and so you know they're out of the mix. And
sounds,
you know,
sounds like your life when you were a bachelor.
Yeah.
Had to throw that one out there, Adam. So do you have you think that we're resuming a bull market? I mean, some of the weekly long-term charts, and like Nick likes it a lot at Nick Trades, and I think Greg is very positive, and they have been. And maybe we finally got liftoff in yen last week. I know that it's going to.
I really like just on the chart. I mean, I could make the argument on both sides for which way it should go. The break in yields was concerning when it went below 217 the first time. I mean, we are back above, like you mentioned. But the trade, I think, here is global coordinated tightening. And if you have England tightening, you have the Fed maybe tighten some more, Canada, Australia starting to turn. Well, the yen is the high yielder, and it can go from here. You know, that tax cut happens. I mean, the trade last week was Irma, right? Irma didn't really happen the way people feared, and you know, dollar yen has been on a run since then. I don't think that gap's getting filled anytime soon.
Okay, you think we could challenge those highs from a year or so ago? I think about 120-ish, 125.
Yeah, I don't see why not. I mean, there's a good scope for upside. I believe in that tax cut, and I think you can go easily higher from here. You know, on this week on the agenda is a lot of geopolitics, so it's a bit of a fear. I think Trump meets a world leader like 3 or 4 a day all week. UN meeting. You know, but Korea the market seems to have decided that, you know, every time you sell on these rumors of missile launches, you end up losing money. So I don't, you know, unless there's some dramatic new, you know, it can't be old news. It has to be something new. Like, I don't know what the heck they might do. Then you can get the risk aversion. And that's always the risk with the yen, right? Right. Stock market's at all-time highs, like you say. I mean, the dollar yen's still pretty cheap. What's not to like about that trade? And I think it's probably as good as anything that's out there right now, because we're probably in the early innings of it, and up to 114 could happen pretty quick.
So I know we had a little discussion about what was happening in the Middle East last time, and we've had a very nice rally in crude towards 49, and looks like it's trying to break out here to the upside. You're still worried about geo stuff in the Middle East and Trump kind of pressuring Iran. It almost looks like that would be his preferred target. What do you got? Okay, nice pen.
Yeah, try to keep it interactive.
Did you didn't vote for him from Canada? You know that would be.
Oh yeah, we're gonna have. When I was living in Panama. Remember?
Yeah, that's right.
I lived in the Trump Hotel there in Panama. That's where I got that.
Oh, okay. All right. So what do you think?
I was living a single life, living in Panama. It was paradise.
Yeah. All right. Well, you know what? That's a pass, buddy. Yeah. Now you have Now you have different blessings, and I think more worthwhile than your carefree living the big Bachelor FX life. So where are you at on oil now that we're pressing this 50?
It was when we talked, it was Saudi Arabia and Qatar. We were talking about the potential for invasion, and some emails were leaked on the weekend. It showed that Saudi Arabia had talked about invading Qatar, and I really still think that's something is happening in the background in the Middle East.
They also went to Israel, high-ranking Saudi officials last week. Someone was saying, well, they're working on the Palestinian-Israeli solution. I think they're making war plans.
I mean, Saudi Arabia delayed the Aramco IPO, and so they're trying to sell their state-owned oil company, for those who don't know, and they need a higher oil price to do it.
I didn't know. When did they announce they're delaying it?
Yeah, last week they announced the delay in it till I think 2019 or something. They don't like oil prices, so Saudi Arabia is desperate to get higher oil prices. They really carried the weight in the quotas, and I think they must have expected to get up to 65 or something.
Well, then I'm pretty convinced something's going to happen in the Strait of Hormuz if they delay that.
I think those risks are underpriced. I don't think Trump cares. I don't think. There's some hawks. His first trip was to Saudi Arabia.
Right.
I don't know what it is, but I know it's probably going to make oil prices go higher.
Yeah, you smell a rat too. You smell a rat.
And I mean, Saudi Arabia too on the weekend or on Friday or last week arrested, the 40 dissidents out of kind of nowhere, members of the royal family even.
Wow.
It could be something internally within Saudi Arabia that sets it off. But barring that, the problem is you can't trade that until you get the headline, I think.
Right.
And barring that, the oil inventories are high, production is cheap, shale is still roaring, and so that, it's down.
So the price action's good, but the backdrop of fundamentals are lousy. So is that a just stand aside market for you? It's okay to, I think if you don't know and you have conflicting signals, it's okay to do nothing.
Well, Estelios was talking about that, just now, and there's so many other things. I mean, dollar yen is a good trade, sterling's a good trade, and if you want to be patient,
it only takes one. It only takes one.
You've got to be right about everything, and if there's something you like, something you don't. And oil right now, I think all that numbers coming in for probably another week or two are skewed by hurricane hurricane disruptions, and it's tough to get a clear read. And even then, you have so much physical buying from refineries on restarts, and unless you're deep into that, that's tough to get an edge on.
Yeah, leave it alone.
In the technical,
you can't get an edge, leave it alone. And I'm so glad that anytime I ask you to step up and come and visit us, Adam, that you're always so willing. I really appreciate you doing that because, I mean, today we did Rock and Roll FX, and it was great fun, and really appreciate you coming here. And guys, you can follow Alex at Forex Live. Here you go. Follow him right here at Forex Live with Mario Draghi playing lead guitar. You could also follow him at FX_button. And thank you so much, Adam, for being with us today, and appreciate your insights and definitely edified our community today.
Thanks so much for having me. You inspired me to have so much energy on a Monday morning. It was bit of a sluggish one there, but
Well,
West Coast, so I got no complaints.
well, you know, I get an early start at 3:30 in the morning. So, you know, my life is like a farmer, up before sunrise, asleep after sundown, except that I nurture seeds of greed for the harvest of pips.
Something about a man making him healthy, wealthy, and wise there, too.
Thank you, bro. Okay, everyone, thank Adam Button, my trading warrior brother, and check out the fall offer from ForexAnalytix, and we'll see everyone for Turnaround Tuesday. Good hunting the rest of the day, and most of all, don't just count your pips, count your blessings. Thank you so much, Adam. Good hunting this week. Follow Adam Button. He's a great follow. He's one of the best out there. Adios, bro.
Oh, good. Thank you very much. Take care, Dale.
All right, man. See you, buddy.